Hey folks, so maybe you just woke up and you're a little groggy-eyed, but here's the information. Essentially, we got U.S. non-farm payrolls that happened at 8:30 a.m. Eastern Standard Time. We were expecting 250,000. We got 528,000. So that's more than double. So what does this mean? It means that the U.S. Job market is still very, very strong. So that's not necessarily a good thing because keep in mind the Fed, they wanted this number to come down a little bit. They want the job market to weaken a little bit so that possibly, we could see inflation fall down a bit. So with this number coming in strong, not only does the dollar rally, the Fed also wants to probably do higher interest rate hikes because this will give them the ammunition they need. Now, if next week we get this coupled with a high CPI, let's say still in the 8%, maybe it comes in like around 9%. Who knows? Maybe it's higher. But, I'm thinking it's going to be in the 8% area. So if we do still see that 8% inflation, then yeah, it's just going to say that inflation is a little bit sticky. And then this recent jobs data, that's just going to say that, hey, this could be a little bit stickier than we initially thought. So let's just go ahead. Let's take a look at the dollar real quick. Now, if I'm looking at the dollar, it's right at 106.56. Now, just to give you guys an idea, this was literally right around 105.54 not too long ago. So here, we rallied a little bit, we chopped around, we got that jobs data, and then we saw this massive, massive rocket. So it almost went up $1. So not to be ironic here, but it's going up $1 on the dollar index. So that's not necessarily a good thing because keep in mind, if you guys remember the tenor of earnings, we were essentially saying that um, a lot of companies they were reporting poor revenues because the dollar was very strong. Now I'm talking about international companies because keep in mind that a lot of these businesses, they are selling their goods and services overseas. But the people overseas, they're purchasing this. And if the dollar is strong, then, they need to spend more money. So to them, it looks expensive. Whereas, if we're going to another country and, we're exchanging our money for another country's money, then everything over there looks cheap because the dollar is so strong. So, we're seeing headwinds in revenue because the dollar is so strong. We're also seeing foreign exchange headwinds because when companies do make earnings in different currencies and they want to convert that back to the dollar, well, they're probably going to lose money. So that is a future worry because if the dollar continues to stay elevated like this, we're going to see continued FX headwinds. So that's that on that front. Now let's go ahead. Let's take a look at just the charts. So right now the S&P 500 it fell about 1% in the pre-market. So right now it doesn't look all too good. And let's just go ahead. Let's take a look at the charts right here. So if we're looking, we have this trend line right here, as you guys can see. Let me just scooch that a little bit. And where are we right now? Well, right here, as you guys can see, we're kind of trying to test this trend line right here. We're not really sure if we're going to fall under or if we're going to just bounce off here, but we'll see. I mean, if in the pre-market we lose this trend line, then maybe we dip a little bit further. Maybe we try and back test it, and then who knows what happens after that? Do we get back above or do we just continue down? So if we are going to continue down, I'm gonna go on the 5 day time frame. There is a gap right here that has not been filled. So as you guys can see, that gap goes all the way down to 408.43. So if we are going to see this gap get filled, I do think it could be on this bad news right here. Now, it does seem pretty crazy to fall over 1%, but keep in mind, we've been having like multiple days where the SPY or the QQQ, they rallied over 1% in one day. So to give some of that back to me would not be all that surprising. Now, let's take a look at one more thing. So I like to look at the weekly time frame every now and then. So on this weekly time frame, I have this trend line right here, as you guys can see. So this trend line, it's going back all the way to 2012. And as you guys can see, it's connecting all of these dots. And let's see where that trend line is right now. So that trend line is right here. So this could act as support. Now, let's go ahead. Let's introduce the 5 EMA. Now, the 5 EMA is tagged quite often, as you guys can see right here. You know, tagged right there, tagged right there, tagged right there. You can see it tagged right there, tagged right there. So this EMA is a pretty important EMA, so I do like to look at this every now and then. So where are we lined up? Well, this 5 EMA is actually lined up with that trend line right there. So this trend line right here that was going back all the way to 2012 is lining up with this 5 EMA. So if we do start seeing this 5 EMA curl a little bit, and we do start seeing price action fall down to this trend line, then I do think things get just a little bit risky. If we do fall underneath this trend line right there, I think the market is probably due for another big pullback. Now, is that going to be the next leg lower? I don't know about that. Is it going to be a double bottom? Don't know about that. So it's all just going to depend on what kind of macro news we get because earnings are pretty much over. So right now, we're just in this lull period where, the Fed isn't going to do anything until September. So that's kind of where we sit in August. So, this is a little bit worrisome because we could see that 75 basis point rate hike. Now, let's just take a look at some other stocks. Let's just see what Apple is doing in the pre-market. Ooh, boy, Apple is down 1.33%. So, you guys, in my opinion, Apple is probably the most manipulated stock on the market next to Microsoft because keep in mind they're waiting. So let me just go back to SPY. Oops. We'll talk about the VIX later. So let's just go to SPY here. We're going to go to analysis. We're going to look at top 10 holdings. So take a look here. Apple is literally a 7% weight. Microsoft, a 6% weight. So these are the two biggest weights in the S&P 500 or the SPY ETF. So that being said, if Apple takes these fluctuations, the market is going to take a big, big reaction. Now, here's what I want to show on Apple. So let's just go ahead, take out these moving averages. So here on Apple, we have this trend line right here. There we go. Let's go on the 1 year time frame. So we have this trend line right here, and this is going to act as potential support. Now we could also make another trend line. All right, so if I do get the second trend line going on here, we can see that both of these trend lines go back quite a bit. They go all the way back to 2020. So as you can see, this trend line was acting as resistance. We broke above that, and then we had another trend line acting as resistance, and we also broke above that. So that's where you see this gap right there. So you can see we even back tested that and we bounced off. Now we have this prior trend channel right here that we're following. So clearly in the pre-market, we're below this trend line right here. So this one is going to get invalidated if we continue down. So I'm going to just go ahead and delete that because I do believe that we're pretty overextended. So that essentially leaves us with this trend line right here. Now I could go ahead, I could draw another trend line like this. And then we'll see if this one gets invalidated. So, this one, we would have to fall essentially under 161 to start invalidating this trend line. So Apple has a lot of support, you guys. It's got this longer term trend line. It's got this second longer term trend line. It's also got this support line, and it's got this support line right here. So if we do fall under this support line right here, then things start looking ugly. So let me just go on a shorter time frame. And I do want to point out that there is this gap right here. So this gap, if we wanted to fill it, that'll be right around 160.19, which is kind of where we saw that support area. Now we also have another big gap, you guys. This is going to take us all the way down to 157.44. So now that we introduce these two gap zones, let's just go ahead and see where that is. Yeah, so this is going to line up with this second trend line right here. So this one goes all the way back to 2020, if you guys remember. So if we fall and we fill all of those gaps, this is the last gap zone right around 157.50, then we'll be in line with this longer term 2020 trend line, which we broke past right here. So we'll basically be revisiting that. If we start falling below that, to me, that's very, very bearish, because these are longer standing trend lines that we broke above. So when we broke above those, it was very bullish, and I've talked about it in the technicals that if we do get above that, it's probably going to be very bullish and we'll see an extended run. But it goes the same way. If we get below that, it's also going to be very bearish. So that's Apple. Let's go ahead. Let's introduce the 5 EMA. Let's just see what that looks like on the weekly. Ooh, so yeah, if we do start falling down a little bit, this 5 EMA will probably curl, and it'll probably be more in line with this second trend line right here. Let's go ahead and introduce the moving averages. So with the moving averages, we have a curling 50-day moving average. So we'll see. I mean, this 50-day moving average is all the way down here at 145.91. So Apple still looks bullish. I mean, if we do see a pullback, hopefully it's not all the way down here. But as things stand, it still looks pretty darn bullish. Now, where I wouldn't want to get below is that 200-day moving average at 158.85. Because, like I said, if we get below that, then we're going to test this trend line right here. And then if we get below that one, then we'll test this one. So there's multiple areas of support, you guys. There's this trend line. There's the 200-day moving average, which lines up with this trend line. There's this bottom trend line that goes all the way back to 2020. There's this trend line. And there's like this 50-day moving average. That would be like, if we fall under the 50-day, that would be very, very bearish. So right now, Apple still looks very strong on the technicals. We're going to have to see some very, very bad news to be breaking below all of these. So last point I want to make is the VIX. Now, if we're just looking at the VIX, it's just been chopping around, but it's been going down. And right now, we're in this falling wedge. So if the VIX just shoots out and we close above this wedge, then to me, that means volatility could go back in play. So let's just take a look at the weekly. So yeah, let's say on the weekly we are closing above 24.71, then to me volatility could come back into play. So do watch out, you guys. Like I said, we are going to get that CPI data next week as well. So we'll talk about the CPI this weekend. But right now, I would say be a little bit cautious, because more fear has definitely just entered the market with today's job data. So I hope you guys enjoyed this video, and have a good one.